Today, we will talk about the alternative minimum tax, AMT. The alternative minimum tax places a floor on the percentage of taxes that a filer must pay to the government, no matter how many deductions or credits the filer may claim. The United States currently has an alternative minimum tax for taxpayers who earn above certain income thresholds. The AMT recalculates income tax after adding certain tax preference items back into adjusted gross income. It uses a separate set of rules to calculate taxable income after allowed deductions. Preferential deductions are added back into the taxpayer's income to calculate their alternative minimum taxable income, AMTI, and then the AMT exemption is subtracted to determine the final taxable figure. The difference between a taxpayer's alternative minimum taxable income and their AMT exemption is taxed using the relevant rate schedule, yielding the tentative minimum tax. If the TMT is higher than the taxpayer's regular tax liability for the year, they pay the regular tax and the amount by which the TMT exceeds the regular tax. There are two alternative minimum tax rates, 26% and 28%. A taxpayer who has a high income and uses large tax breaks may owe a smaller percentage under the standard rules. They are obliged to recalculate the taxes owed under the alternative minimum tax system, and owe whichever amount is higher. For tax year 2022, the AMT exemption for single filers is $75,900. For married joint filers, the figure is $118,100. For tax year 2023, the figures are $81,300 for single filers and $126,500 for married joint filers. Taxpayers have to complete Form 6251 to see whether they might owe AMT. If their AMT is less than the exemption, they do not have to pay AMT. However, taxpayers with AMTI over a certain threshold do not qualify for the AMT exemption. The phase-out begins at $539,900 for single filers and $1,079,800 for couples filing jointly in 2022 and increases to $578,150 for single filers and $1,156,300 for couples filing jointly in 2023. The purpose of AMT is to prevent taxpayers from escaping their fair share of tax liability through tax breaks. Historically, the structure of AMT was not indexed to inflation or tax cuts, leading to bracket creep. Congress passed laws in 2012 indexing the AMT exemption amount to inflation to prevent middle-income taxpayers from owing AMT due to bracket creep. To determine if they owe AMT, individuals can use tax software that automatically does the calculation, or they can fill out IRS Form 6251, taking medical expenses, home mortgage interest, and other deductions into account. The form also requests information on certain types of income and uses specific formulas to determine the AMTI, and the amount of AMT owed. Here are 5 key takeaways. 1. The AMT ensures that certain taxpayers pay their fair share or at least a minimum amount of tax. 2. It doesn't kick in until income reaches beyond a certain exemption level. 3. For 2022, the exemption is $75,900 for single filers and $118,100 for couples filing jointly. 4. For 2023, the exemption is $81,300 for single filers and $126,500 for couples filing jointly. 5. In 2012, Congress passed the American Taxpayer Relief Act of 2012 that indexed the exemption amount to inflation to prevent middle-income taxpayers from owing AMT due to bracket creep. Hope this would help. Thanks for watching.